If we got back to where we started the year, I wouldn't be the least bit surprised. Do we set all-time highs this year? Probably not.
Bitcoin fell to $23,000, Ether fell to $1,200, and Cardano was around 46 cents. The total market cap for cryptocurrencies dropped below $1 trillion for the first time since January of 2021. Today's crash coincides with a steep sell-off on Wall Street as well. To discuss what's happening in crypto markets and which digital assets could survive this crypto winter, I spoke to Ben McMillan of IDX Digital Assets. Let's start with your reaction to the sell-off in crypto today. What is driving it in your opinion?
Yeah, I mean, what's interesting is if we zoom out, the story this entire year has really been about markets repricing growth in the face of inflationary pressures. So obviously we had the CPI number come in a little bit higher than expected on Friday. We saw a little bit of a sell-off on Friday. Markets are reacting to that. Also, too, it's worth noting this is a week in which the QT starts to take place. Fed's balance sheet starts to taper, I think, as of Wednesday. And so, a lot of this has been crypto really going through its dot-com moment. There's a lot of excitement about disruptive internet technology back in the 90s. And there's also a lot of hype, a lot of irrational exuberance. And so similar to what we saw in the early 2000s with kind of a washout of tech stocks, we're seeing the same thing in crypto right now. So with the macro backdrop of liquidity coming out of the system. So with that said, you've got all of those kind of macro headwinds that, crypto is dealing with, in part kind of this, baby getting thrown out with the bathwater as it relates to the kind of their dot-com bust. But then you've also got kind of very specific, tail risk events, Terra Luna blowing up about a month ago. Now over the weekend, we have Celsius, which is one of the biggest crypto lending platforms, announced that it's suspending client withdrawals because of quote unquote extreme market conditions. This is just coming on the heels of Terra Luna's meltdown. And so investors are starting to, find out that the counterparty risk in crypto is very real. And so on top of everything, I think you're seeing an additional discount trade take place because of just, risk coming out of the system as it relates to not just the macro backdrop, but all of these crypto specific issues as well.
And dropping off of that, Bitcoin dominance in the crypto market is now at the highest level since October of 2021. And so you mentioned how investors are taking a little bit of a more scrutinizing these business models, how long these coins have been around. So do you think there will be a kind of flight to quality right now that could benefit, say, a Bitcoin in the long term?
Definitely. I think we're starting to see that. So even in the near term, you typically do see a flight to quality, just kind of away from altcoins into Bitcoin and Ethereum to a lesser degree. I also think, to your point, longer term, you're going to start to see a greater appreciation for risk. And again, I like not to belabor the point, but this is very much like the dot-com bubble, where anything with the dot-com got a bid, raised a ton of money in the 90s, and then afterwards in the early 2000s, all of a sudden it mattered what business they were in, what was the business model, were they making money? And so I think we're going to start to see a similar behavior going forward in the crypto space, where you can no longer just be an anonymous founder and say the word blockchain and disruptor and raise $10 million for your project. It's going to have to start to VCs in particular, as well as investor capital, are really going to be more discriminating in terms of what is the protocol, what is it doing, what is the use case, what is the payback for investors. And so I think we're seeing in the near term a kind of an immediate flight to quality, much like we've seen for U.S. Treasuries or the U.S. dollar as it relates on a global scale. Within the crypto ecosystem, that's kind of Bitcoin is the flight to quality play. But again, longer term, I think we're going to see even more of a bid for that on the back of investors being more discerning with their capital.
And you mentioned Celsius pausing withdrawals today, and they have some pretty big exposure to DeFi protocols. And so are those protocols and the investors that are exposed to them, particularly at risk during this bear market?
I think what you've seen across the DeFi landscape, and it's one that we follow closely, this is really where you've seen just a real test of the quality of the DeFi protocols. The ones that are battle tested. There's no vulnerabilities in the smart contracts. You don't have these kind of exploits happening, which is the tail risk scenario. And you don't have certain stresses. So, with Celsius in particular, they have a lot of exposure to so-called staked ETH. One of the things about Celsius was, when you gave your money to them as a platform, it said in the fine print that they could do whatever they deem necessary to earn a yield. And so one of the things that they would do is they would take Ethereum, they would stake it through a protocol known as Lido, which provides kind of decentralized staking as a service. It's actually a great protocol. But in return, they would have you would have staked ETH, which generally trades at a 1-to-1 peg to normal Ethereum. But there's a liquidity discount there. That peg started to become stressed over the weekend. It's trading, at about 0.95 staked ETH to Ethereum, which normally doesn't seem like a big deal unless you have outsized exposure to it. And so that kind of started catalyzing concern about whether or not there would be a run on Celsius, forcing them to pause withdrawals. So I think a lot of that is not necessarily an issue with the protocols per se, but how they were used and just basically kind of good old fashioned leverage in the system that now Celsius is having to contend with. But I do think you've seen kind of there's investor capital starting to be more discriminating as it relates to protocols. And they're starting to look closer at the business model. They're starting to look closer at how long has it been around, starting to look closer at smart contracts. We spend a lot of time actually digging into not just has the code been audited, but looking at it ourselves. These are the kind of things that are going to start to matter to investors that were largely overlooked up until now.
And finally, just sum it up for us. What is your outlook for the crypto market going forward?
So we've always, maintained a risk managed approach. That's our whole firm was built around that, not just within crypto, but across asset classes. And so we always, we look at our models all day long to kind of help infer that. And so, our models started kind of raising cash at the beginning of this year. Actually, back at the end of this year, we were entirely in cash before the first Fed meeting. And so we're at a point now where we are starting to see kind of a bottom form as it relates to the kind of the models that we look at internally. You're seeing it on chain, you're seeing it in the price action. The caveat, of course, is that, that doesn't mean Bitcoin can't go lower from here. It certainly can. But we're getting to a point now where it is starting to look like, we're starting to see some kind of value buyers come in at the margin. A lot of this selling pressure has been flushed out. So I wouldn't be surprised to see this is contingent on kind of what we see in the macro landscape. But if we kind of can get through the back half of this year into Q4, Q3, Q4, I wouldn't be surprised if we see a risk bid come back to markets. And not necessarily wholesale, but selectively. And I wouldn't be surprised if we saw crypto, in particular Bitcoin, participate in that. What does that mean for prices? If we got back to where we started the year, I wouldn't be the least bit surprised. Do we set all-time highs this year? Probably not. But, we are closer to the bottom than we are to the top. And, we're starting to get to the point where, we could start to see some kind of buying come back into the market. So, kind of a range of prices there. And, we're certainly not calling for, $1 million Bitcoin or whatever, but, we wouldn't be surprised to see risk come back into this marketplace and kind of get back to, break even by the.
First up, DeFi lender Celsius halted transactions this morning as crypto markets tanked. In a memo, the company said it was pausing withdrawals, swaps, and transfers due to extreme market conditions. Now, Celsius is among the biggest players in decentralized finance lending. As of May, it has around $12 billion in assets under management and $8 billion lent to clients. The decision to halt transactions has raised concerns about the business's solvency. Celsius saw the value of its assets cut in half since the crypto market's highs back in October of 2021. Its Cell token has lost 97% of its value since then. From one halt to another, Binance also paused some transactions this morning, this time for Bitcoin. The company's CEO tweeted that a stuck transaction led to a backlog. He also said it would take around 30 minutes to fix, but later said it would take longer than first expected. By noon Eastern, transactions resumed, and the CEO assured customers that assets were safe inside a fund the company created back in 2018 to protect users. Finally, more than 2,000 investors claim Binance's U.S. business misled them about the Terra blockchain. The lawsuit claims Binance U.S. is not registered as a broker-dealer with regulators and therefore violated U.S. securities laws. The users say Binance U.S. knowingly promoted a flawed product and falsely advertised Terra USD as a fiat-backed product. Binance U.S. told CoinDesk that the company is, quote, registered with FinCEN and adheres to applicable regulations. These assertions are without merit.